All right, hi everybody, welcome back to another video in which I want to talk about the newest investment I recently made. It's an investment I made maybe 2 or 3, maybe 4 weeks ago. I can't recall the exact date. And it's an investment in a Polish business. Actually, my very first investment ever made into a Polish stock. And maybe broadly speaking, you might want to quickly point out that Poland as an economy is doing incredibly well. It's sort of considered the growth champion still in Europe, where many of the other more established economies are actually struggling with Germany in the core and center of all of that. Germany has been like not posting significant growth or any growth for multiple quarters now. And Poland is doing the opposite. Poland as an economy is doing very well. And so I think the market itself is quite interesting for investors. It should be interesting. There are many interesting businesses that are also publicly traded on Polish stock exchanges, even though this business here, and the business is called InPost, is listed in Amsterdam. So what is InPost? First of all, some basic numbers here. It's a 5.4 billion euro market cap company. The enterprise value right now sits at 7.4 billion euros. And personally, I haven't heard of that company until quite recently, actually. So I was discussing another new investment I made in a Japanese company, Timey, with a fund manager on X. And he brought up InPost as a company to compare it to, because both Timey and InPost, they're fundamentally different businesses, of course, but both benefit to some extent from network effects. And I think one mental model to internalize is that the strength of a network cannot only be measured by the number of users being part of that network, but also by network activity. Both Timey and InPost arguably benefit from very high network activity, which is a signal that the network is very much intact and very strong indeed. So what does InPost do? Put it in a nutshell. And what I will say is I'll point you to my write-up on my blog where I described the business and the investment case in 28,000 words. It's probably a 90 to 120 minute read, so it actually takes time to digest it. And of course, I can't cover all of that in a short 10-minute video. So I'm just going to give you the elevator pitch here. So what does InPost do? In a way, InPost operates so-called parcel lockers, so-called APMs, which stands for, I just checked again, it's automated parcel machines. And it's basically the market leader in Poland in out-of-home delivery. So they have these compartments, these APMs, which usually include 200 plus individual lockers, where they then deliver parcels to and pick them up as well. It's a completely new model that is counterposition to the incumbents in that space, the DHLs, the Deutsche Post, the Royal Mail, and so on and so forth. Because what they do is they deliver to door, and the out-of-home delivery to these parcel stations that are usually within walking distances for most people, especially in urban areas, well, that's a fundamentally counterpositioned model. And it provides a couple of examples. First of all, it's cheaper. It's cheaper for the merchant in terms of delivery costs, or if the consumer is paying the delivery cost, it's cheaper for consumers too. It's more convenient, which is sort of a bit counterintuitive, and I've argued about that with a couple of my investing friends. I guess that's to some extent also subjective, especially if you live in a suburban area and the delivery man may just drop it off in front of your front door. Maybe that's the more convenient way to go about it. But for me, I actually think out-of-home delivery is more convenient, because usually the delivery windows are quite wide. So when I expect a parcel from, call it Amazon, I'm not sure whether it will arrive at 7:30 in the morning or at 7:30 in the evening. And I don't know, that waiting time, maybe you're in online meetings of your job, maybe you have other obligations during the day, and timing that just to make sure that the parcel arrives when you're at home, I don't know, that can be a bit of an inconvenience at times. And so just going to these APM stations with your phone, where you scan in your QR code or type in a code that you have received and via email or in the app, the accompanying app of InPost, for instance, I feel like that's actually the more convenient experience for many people. On top of that, you have factors like theft, especially in the US. That's a big problem, parcel theft, but parcels are also more likely to be damaged if a delivery person has to deliver it to door. So why is it actually cheaper? I think that's important to understand as well, because the main cost driver of deliveries is actually the last mile. And in a way, InPost is circumventing that by just having the parcels delivered to these APM machines. And what in practice this means for the delivery man is during a single shift, call it an 8-hour shift, he will be able to deliver around 1,200 parcels. Whereas if he would do the deliveries to door, he would only be able to deliver around 60, 70 parcels per day. So you have a 10x plus increase in productivity in a way, which of course tremendously brings the cost down. So it's more efficient, it's faster, it's more reliable. And on top of that, if you just think about it, it's also more environmentally friendly, environmentally efficient, because, well, you just deliver way more parcels with way less miles you have to drive in an actual car. So put in a nutshell, due to these reasons, both customers and merchants love InPost's service. And just as a side note, it's not only a win-win proposition for these two participants, but also for the landlords where the APM machines are placed, because usually you will find them in front of supermarkets, in front of fuel stations, things like that. They benefit from a slight increase in foot traffic, which, well, leads to more people purchasing at these places. Yeah, and so InPost has built like a large network of APMs in Europe nowadays. Their core market is Poland, where they started in, I think, 2010. So they've been onto this mission for quite some time. In Poland, I think I have the number in front of me here. Yeah, as of Q2, they have 26,000 APM machines. And in all of Europe, they have above 50,000 APM machines. So as you might already figure out by me presenting these numbers to you, they also have a presence outside of Europe, which is part of the investment thesis. Poland is their most mature market, and they are now expanding into other geographies, with the two big ones where they already have quite a material presence being France and the UK. These businesses are not as profitable as Poland still is. In fact, their non-Poland business is still unprofitable, but I think they've actually reached a point now where these businesses will be able to fund future growth themselves. Because what ultimately matters, and that's important to understand in this business, is volume and utilization rates. If you put in an APM machine, which usually costs around 20 to 40,000 euros in front of a supermarket, and maybe only 5% of the lockers actually used, well, then you're not going to have a good business. You will be making losses. If on the other hand, you reach quite high volumes, 50, 70, I actually learned the other day that in theory, an APM might even reach utilization rates, volume rates of above 100%, because sometimes they are filled and, parcels being picked up more than once a day. Well, then in theory, could you even get to utilization rates above 100%. And the higher you go here, the more profitable the business simply becomes. And finally, I think what's also worth pointing out is that InPost doesn't just own these APMs, but now it's operating a full logistics enterprise that covers not only the APMs, but also depots. They employ the delivery personnel, everything that is related to, running an efficient logistics operations. They're also leveraging AI capabilities nowadays in their logistics centers, because most of their packages, if in Poland at least today, if you order them before 12 p.m., it will arrive next day, which is super fascinating. So that's the business. And there would be, as said, much more I could in theory talk about, but I want to keep this video short. I guess the other big question you may be wondering about is valuation. All of this sounds fantastic. So far, the business is growing very fast. I do expect growth to slow down in the coming years, but I do expect still decent growth. So it's not going to be a business that is simply going to be stagnant. But what price do you have to pay for a business that is very profitable at steady state, as we can see in Poland? I would expect slightly lower profitability rates outside of Poland, because labor is a major cost ingredient in the overall unit economic structure, and labor in the UK is simply going to be a little more expensive than in Poland. But nonetheless, Poland shows that at steady state, you're looking at an incredibly attractive business, which is, again, not what you would expect from a logistics business. If you look at the free cash flow margin of DHL, FedEx, and you name it, these incumbent logistic companies, they post single-digit free cash flow margins, 3-4%, nothing super impressive. InPost, on the other hand, actually operates at 33%, double check me here, but I think 33% operating income margins in Poland. And as I said, I'm optimistic that internationally they will get to very attractive profitability rates as well. So valuation. Again, I wrote a very long segment on this on my blog. What I would encourage you to do is to, for instance, just value the business on InPost's profits in Poland alone, and then treat everything else sort of as option value that you get on top for free. That would be one approach you could take. What I also did is I ran an evaluation exercise where I was taking the profits from Poland, and then I was assuming, well, what kind of profitability could the business reach internationally, which now makes up more than half of revenue, by the way. So by just valuing it based on Poland, you're like super conservative. And with that approach, I was getting to a single-digit multiple, which I think is super attractive given the position InPost finds itself in. Now, there are, of course, material risks here to be aware of as well. I guess what you have to understand here is the mode of InPost. I think what you should probably be worried about is, well, couldn't Amazon, for instance, just come up and build its own APM network in Europe itself? I think the other day I saw that Amazon plans to invest around 2 billion in their Dutch logistics network. Again, that would deserve its own video. I'm not overly worried about that. In Poland, you also have Allegro, which used to be the biggest customer of InPost, trying to build their own network. And I think InPost will be able to deal with these challenges, which, again, would probably deserve its own video. The business, and that's maybe the final point I want to make here, the business is still run by its founder. The founder still owns 13.5% of the business. I just recently watched another interview with him, which I think was published less than a year ago. I'm going to display it on screen so you can watch it yourself, maybe after this video. Super interesting figure, a bit of a polarizing figure, because he likes to be quite vocal about the company's mission in public, and not everyone likes that. And he's sort of a bold, polarizing character. But I think he has become more reasonable in recent years. The business actually almost went bankrupt in, I think, 2016, 17, around that period, where the company was actually publicly traded before, was taken private by a PE firm. The underlying business was improved, streamlined, listed again because of the capital requirements of actually building and expanding that network. But again, all of that is a lot to cover, and I can't cover it in detail in this video. So again, I'm going to point you to my blog where you can find the deep dive. Okay, let me know what you think of the business, of the idea. Obviously, no investment advice here. I'm just sharing my thoughts about this particular business after doing my fair share of analysis. I'll talk to you soon in another video. Take care.